So I just wanted to share a brief observation that I've noticed in the interest rate markets. There's been a few changes going on in the last couple of weeks, and basically the way I see it is the banks could be setting people up for a bit of a trap in terms of trying to get them to lock into fixed rates. And there's a couple of reasons that I think people should just be a little bit cautious around that. So I'll just step you through that briefly. Yeah, so obviously, I'm sure which everyone's aware, there's been an ongoing trend with the cash rate trending downwards, particularly over the last couple of years. The RBA has been cutting. We've been heading a little bit lower. And obviously what that's also resulted in is not only obviously variable rates have gone down, but also there's been some fairly low fixed rates available at the moment. Which, you know, some are down in the sort of low twos, even seen a few sort of sneak in the sort of high 1.9s, etc. So there's sort of rates in that sort of territory. But what I've seen in the last few weeks is I've actually seen that there's been a number of lenders starting to come out and actually do further cuts on their fixed rates. But there's a couple of reasons, you know, and obviously that could seem appealing, but there's a couple of reasons why I think you maybe need to exercise a little bit of caution around that. Yeah, so the first one is in relation to the exchange rate at the moment in terms of where the Aussie dollar is sitting with the US. So you know, for a fair while during COVID, we've sort of been sitting below 70 for quite some time. It's been sort of, you know, struggling to get much above that. But in the last couple of weeks, you can see that it's actually started to trend upwards. It's actually cracked up above, well, it's hit 73 a couple of times, but it's up to, you know, sort of 72.5 at the moment. So what that means is that basically our exports are going to be looking a lot more expensive to the rest of the world, because basically if our currency goes up, that makes us more expensive, which therefore means that we're less attractive, which could actually impact the export market, make us a little bit more competitive, and could actually sort of slow GDP, which obviously the Reserve Bank don't want to happen. So that particular factor could actually maybe see the RBA rethink its cash position. So at the moment it's sitting at 0.25, but if basically our exchange rate kept trending upwards, that might actually force their hand to do something there, which could actually put some downward pressure on the cash rate again. The other thing that's been pretty interesting is also just what's happening with the swap market at the moment. So in particular, if we have a look at the three-year market, that's actually been starting to trend back downwards again. And same with the 10-year market, and a little bit of a dip even in the 5 years. So what that's telling me is that the money market is potentially factoring in a rate cut. In there's an expectation that there could actually be a decline in interest rates going forward as well. So again, look, not a guarantee here. There's a lot of things that could actually impact that. But potentially what it might be doing, I guess the first sign I always see is that when I start to see banks cutting their fixed rates in particular, and start to promote that, that's usually can be a clue that there might be potentially some other rate cuts coming in the variable market, or an expectation that there might be a drop in variable rates. So you're going to start seeing probably some more competitive fixed rates come into the market. That'll be my expectation. But there's a couple of key points you need to remember. The first one is that fixed rates, or in terms of fixed rates, the banks want you to take a fixed rate. They want you to lock in your loan. The main reason being it's a great retention strategy for the bank. If you lock in for 3 years, that pretty much prevents you from going elsewhere. So they know that they've got you locked in, and therefore they're going to keep you on their books a lot longer. The other factor is that even though you might get onto a low fixed rate, that doesn't necessarily mean a low rate doesn't necessarily mean that you will pay off your loan faster. There's a number of factors on that. First thing with fixed rates generally, and look, there can be some exceptions to this rule, but this is generally the case. There's going to be restrictions on additional repayments. So So some lenders will only let you pay in an extra $5,000 over the whole fixed rate term. Some maybe 10, but you're pretty limited in terms of what you can pay in. The other thing is you generally don't have any transactional capabilities on those loans. So that means that you don't have the ability to park lump sums in there, then draw out when needed. So generally what that means is because you can't access those additional payments, people tend to keep those additional payments outside that loan, which means they're not paying in as much as they potentially could and not reducing the amount of interest charged on that loan. Of course, the other thing is there can be fairly high penalties to exit. So, if you're in that loan and you're locked in there and something changes within your circumstance, or there might be a better deal out there, then it could potentially cost you a lot to get out of that loan. So before you fix, it's really important to have a look at your situation. And I guess the key thing I'd stress is a low rate in itself does not necessarily mean that that's going to pay your loan off faster. There's a lot of factors that are going to actually impact your ability to pay off a loan sooner. So if you're looking for strategies to be able to pay off your loan faster, a good place to start is to actually book an initial chat with me. If you go to the link below on this video, there's a link there. You can actually go straight through my calendar and book in a time for an initial telephone chat, or there's also a link on the email as well. Anyway, I hope this information has been of use, and have a great day.